Ever wondered where a chunk of your paycheck disappears every payday? Today, we're breaking down the different taxes deducted from your earnings so you know exactly where your hard-earned money is going. And if you're self-employed, stick around. We'll cover what you need to know too. First up, federal taxes. If you're an employee, your employer automatically deducts these from your paycheck and sends them to the government. These include, number 1, federal income tax. This is based on your earnings and filing status, like single, married, or head of household. The more you earn, the higher your tax rate. Number 2, Social Security tax. This funds benefits for retirees and disabled individuals. Employees pay 6.2% and employers match it. Number 3, Medicare tax. This funds healthcare for seniors. Employees pay 1.45%, and again, employers match it. Bonus fact: if you make over $200,000 a year, you'll pay an extra 0.9% in Medicare taxes. Chapter 2, State and local taxes varies by location. Now let's talk state and local taxes. These vary depending on where you live. State income tax. Most states tax your income just like the federal government, but if you live in states like Texas, Florida, or Nevada, you don't have to pay state income tax. State unemployment tax. Some states require employees to contribute to unemployment programs. However, in most cases, only employers pay this tax. Local taxes. If you live in certain cities like New York City or Philadelphia, you might also have local income taxes deducted from your paycheck. Chapter 3, Self-employment tax. But what if you're self-employed? Instead of having taxes withheld from a paycheck, you're responsible for paying them yourself. Self-employment tax, 15.3%. This includes Social Security, 12.4%, and Medicare, 2.9%, which is basically both the employee and employer share combined. That's because self-employed people don't have an employer covering half the cost. Quarterly estimated taxes. Since you don't have an employer withholding taxes, the IRS requires self-employed individuals to estimate their tax liability and make payments 4 times a year, in April, June, September, and January. Tip: to avoid surprises, many freelancers set aside 25 to 30% of their income for taxes. So, to recap, if you're an employee, your employer deducts and sends federal, state, and local taxes on your behalf. If you're self-employed, you're responsible for paying the same taxes, but you do it yourself through quarterly estimated payments. Now that you know where your money goes, you can better plan your finances. Got tax questions? Drop them in the comments below.